What up, HyperChange? Welcome to another episode. Tesla earnings came out yesterday. The stock is down 9% today. We've got a ton of news and analysis to discuss. We heard from Elon and the management team. It's our 4-time-a-year Super Bowl for Tesla shareholders. Tons to break down in this call, and I thought more than what was said, what wasn't said was almost even more interesting. So let's dive into it. I'm going to run into the results right now, and then we'll talk about the conference call, which was even more interesting, but I want to quickly go through the financial results. Pretty simple story that happened this quarter. Essentially, we get rebound in deliveries. That causes automotive revenues to rebound from this 14 million last quarter up to 16.5 million. Another solid quarter for energy generation and storage. It looks like it's flatlining here, but that's because it had huge growth. So still a solid quarter there. Services and other was the only section of Tesla's revenue to grow year over year during the quarter, up to $3 billion. Overall total revenues here came in at $22 billion, down 12% year over year. Gross profit came in at $3.9 billion, down 15% year over year. Gross margin, 17.2%. Worse than the 18% in Q2 in 2024, but better than the 16.3% in Q1 2025. Then in terms of income from operations, we had a nice bounce back to 900, almost $1 billion, up from 400 million last quarter, but that was still down 42% from the 1.6 billion in Q2 2024. Free cash flow from the business was strong, 2.5 billion in free cash flow from operating activities, up from 2.2 billion in the last quarter, but because CapEx boomed to 2.4 billion, that was way higher than last quarter. The free cash flow was just 140 million there, so Tesla's cash balance on the quarter pretty much staying flat at 37 million, right around there. Couple more eensy-weensy highlights from the quarter just to break down. I think this is one of the most fascinating trends in Tesla's financials now, is you can see here energy and storage are becoming a much bigger and bigger piece of the gross profit of Tesla. Now, this isn't revenue, this is gross profit. If we go to the actual revenue, you can see they're a big part of the revenue, but in terms of gross profit, the trend stands out a lot more because their profitability is increasing, and Tesla is starting to diversify away from just auto business with this service and energy storage balancing that out. And I think there one little tidbit on the call about how AI demand and I think just energy infrastructure demand for the Megapack is huge, and that business is going to start re-accelerating growth in the second half of this year and into next year. So this trend of, even if the auto business continues to struggle for a bit, energy and services and other sort of picking up the steam for the growth is an interesting trend to watch there. So now I want to dive into the call because, okay, Tesla's still making a little bit of money, tax credits go away, maybe they're still a little profitable or just about break even. That's where we're looking at the business for at least the next 3 to 4 quarters. Now, Elon Musk started his prepared remarks on the conference call talking about Robotaxi. They're going to expand to California, Florida, Nevada, but he was hesitant. And I think this is why I say the biggest thing that happened on the call was what wasn't said. Like, I just feel like Elon was a bit hesitant and calm and reserved, especially compared to last quarter's call. Like, his energy just wasn't there. And maybe that's, who knows what happened during the day, could have nothing to do with Tesla. But part of my read between this call is I think this has been a growing issue from Tesla, but the fact that Elon Musk hasn't been paid since 2018, I mean, in 7 years, we haven't paid Elon Musk, who's generated hundreds of billions of shareholder value, almost $1 trillion, and the company's crushed it, outperformed every index since then, and we haven't paid him a single dollar. So he doesn't even, it's not even about the money, he doesn't even have control of the company he worked for. So this is, and that would dampen my enthusiasm. If I was the CEO of Tesla, I'd be like, screw Tesla, like either pay me or I'm not working. Like, I don't know. Like, so the fact that he even continues to work at all, I think says a lot about his character. But at some point, the enthusiasm has to wane. You look at his X posts, you look at what's happening, with XAI, the amount of moves that they're making. I mean, it's clear that I think a lot of Elon's focus, excitement, best talent, and yes, it's different end games, but is going to XAI. We know XAI was supposed to be part of Tesla, but then it wasn't because he couldn't recruit the right engineers. And I personally think a big reason for that, which I don't blame him, but he's not saying, is he doesn't own any of Tesla. He can't even control Tesla. So of course it makes sense to start all the valuable technology in a new company he can actually control that's run privately, where he can't get screwed over by some dumb judge. So I think that is like the tone on the call. So I'm trying to balance like my high level thoughts here with any news on the call, but to be honest, there wasn't that much news on the call. Like, they're very kind of vague about everything. I thought it was interesting. Like, they're trying to launch Robotaxi as soon as they can. Elon Musk says it's going to have a material impact on the financials in the end of next year. Is that Elon being optimistic? Maybe. So, and then he kind of goes on later in the conference call to say, well, Q3 is not going to be good, Q4 is not going to be good, Q1 is not going to be good. Maybe Q3 will be okay because of all the tax credit expiring, and then Q4, they're coming out with this more affordable model. So that's all good, but Elon seems to be sort of down on the company for the next 4 quarters until second half of 2026 when Robotaxi's expansion starts to play into the financials and we start to see strong financial results. So I thought that was kind of an interesting acknowledgement of this sort of lull period we're in for Tesla. And the other most important takeaway from the call, I thought, was Elon Musk talking about XAI. Will Tesla invest in XAI? And he's kind of like, almost like it's not, and there's so much lawyering going behind the scenes here that what he can and can't do, they're both his companies, conflicts of interest, blah, 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 blah. So what can Elon actually do and say is very limited in the public domain about this. But so he almost has to make it like someone else's idea for the merger to happen is kind of how I'm reading this. So now shareholders are scrambling. The shareholder meeting's on November 6th. We need to get this on the proposal. I mean, I said Tesla should buy 5% of XAI, 10% of XAI. That was when the company was worth $40 billion. Now they're worth 110, but they merged with X, so they're worth more like $80 billion. So the value's doubled already since then. Now, in the next funding round, XAI is probably going to double again, 200 billion. So there's this very interesting dynamic at play right now. Elon probably owns way more of the combined XAI than Tesla. So the higher XAI's value to Tesla, if they do ever merge or investment, then he wants the value, Elon's incentivized in terms of control to get the value of X and XAI higher if there is ever a merger or investment. So I don't know. And it's kind of just a symptom of this Delaware case that caused a lot of problems. And now these downstream effects are massive, which is a huge bummer for Tesla shareholders. And why is the stock down a little today? I think it's because, there's all this talk about the affordable models, but those have obviously been kicked into Q4, so we still don't know much about them. They're kind of just like a miniaturized Model Y, it sounds like. So I don't know if the market's like bummed out about that. Robotaxi, very vague. They said they want to 10x the Austin area. And then they even had like a double down in the analyst questions about is Robotaxi expanding, and the CFO, I think, answered and was very kind of like, I don't know. He just basically said what Elon already said. He was like, oh yeah, like we rolled it out in Austin and like we're trying to get California, Nevada, and Florida. So they won't give a single KPI on the Robotaxi. They don't give any guidance on the Robotaxi, which I think could be smart because then you don't have any numbers to disappoint. But I think that was the big takeaway. Market was salivating for news about the Robotaxi. Didn't really get anything they wanted. It's just, we're going to keep doing it. It's going to crush it. It'll add to the financials in 18 months. So that's where we're at with that. Optimus, they're making good progress on Optimus. It sounds like V3 is coming out next year. Elon laying this high-level goal that he wants to be building, scaling as quick as possible to 1 million Optimus robots. Eventually, in 5 years, 2030-ish, he sees them building 100,000 robots a month, 1.2 million a year, 50 G's a robot, 50 billion a year in robot revenue in 5 years, potentially. So Tesla continues to be in one of the most fascinating points in its history. You have them transitioning to being from pre-autonomy to post-autonomy. Elon Musk says it's one of the biggest things the company is going to do in terms of transforming. He's working on a new master plan he's cooking up for Tesla. That was a little tidbit that dropped on the call that I think not enough people noticed. Elon's working on a new master plan. That's big. So, but I don't know. I just feel like there's something about the energy on this call, this very critical moment for Tesla, where the earnings in the vehicle business is kind of stalling and flatlining, and now we're waiting for this Optimus and Robotaxi products to kick in the financials, and we're sort of in this wait and see moment. So I think that's why, many big companies they don't disrupt themselves and like bet the whole company to disrupt themselves on new technology. Like they kind of coast on where they're at. Tesla, because of Elon Musk, this is why we need to get him paid, because he's our biggest asset, is, they're disrupting themselves. And they're saying autonomy is coming next. We're going to totally upend and change our business model for an autonomous world. So Tesla is $1 trillion company that's operating like a startup. They're going for a 10, 20, $30 trillion end game. And right now they're worth $1 trillion. This is a lot more like startup investing than it is owning a public company. That's why the stock is so volatile. So I don't know. I think Elon's going to do it. I mean, I've seen him pull off the impossible time and time again. I just think it's important to take a step back. The Model Y, best-selling car in the world, produced at outstanding profit margins. I've seen FSD on my Model Y go from unusable in the Seattle streets towards I can't live without it in the Seattle streets, and I only rent Teslas on Turo. I think as the Robotaxi expands, you're going to see more and more hype for Teslas as Robotaxis. Like that will drive sales of Teslas is once people realize, oh my God, I could literally buy a Robotaxi for 50 grand. So I think we're in this little bit of a lull right now, but it's like the calm before the storm. Like Robotaxi's out, it is expanding, that is happening. Like it's almost like it's we're not seeing on the financials, so we're just kind of discounting it. But that is a brick by brick new business that Tesla's going to build that is Elon has been saying for years now is the foundation of this new company is FSD. And so now brick by brick they're building it, but it's just going to take some time. So that's why I think we're in such an interesting period right now. I think volatility on the stock's going to be high, but I'm holding on to my position tight because I think sooner rather than later the market is going to start to price in Tesla's Nvidia moment as they realize FSD and Optimus are making it the biggest company in the world. So anyway, but the earnings got to be there. Those got to drive earnings. Like Nvidia's earnings are going like this. That's why the stock's doing it. So for Tesla to do that, we need those earnings to hit. It's not coming for another 18 months. So what happens till then? You let me know. This is HyperChange, Tesla Q2 25 recap. Love to see y'all scheming in the comments below. I read all the comments and I try to reply to some of the good ones. So let me know what you think. I want to know. Actually, I'm not just saying that. And yeah, see y'all next time. Peace.